Hey everyone, welcome back to our new training session, which is going to be CPI and a couple of things to discuss as well. So let's try to get through as fast as we can about the theory part, and then I want to talk about some key levels on some of the currency majors, and yeah, a couple of trades with the straddles, but I think majority of them, it's going to be really hard to actually use the straddle strategy. So I do want to spend some time to talk about what we are expecting tonight, and in terms of the key levels to watch out for immediately after the news. Okay, so let's get started. This is news trading session number 3, and this is going to be our inflation night. My name is Vira Injero. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right. So just quickly a little bit about myself. If you never attended my previous sessions before, my name is Vira Injero, and I've been a full-time trader with over 22 years of experience by this year. And I'm also a professional trading coach and technical analyst since 2007 in the industry. My expertise is in the Ichimoku Kinko Hyo technique, and I've also been invited as a guest speaker at Trading Investing Expo in Australia, Investfair in Singapore, ATA, as well as the APTA conferences, which is the Australian Technical Analysts Association, Australian Professional Technical Analyst, and I'm also a regular contributor at CNBC Bloomberg as well as BBC UK. All right. So as per usual, we're going to go through with the bonuses for participants. We're going to show you the promo code that you can use, and you should already have access to the private Telegram channel if you registered through the Octa's website, and or you have attended previous sessions before. You should already be in that Telegram channel. Okay, this is a code. It's non-farm 2024. You still have a good 4 months to actually use this code. It's expiring on the 31st of December 2024. This is a 100% deposit bonus, basically doubling your deposit as a bonus. Okay, so obviously going to be terms and conditions with that bonus, so make sure you ask the team what those terms and conditions are. And it is a good equity bonus, I would say, that you can actually use as part of your trading. Okay. All right, so we'll go through some theory first, and obviously we want to talk about what inflation is, how it's going to affect a lot of the stuff here, as what's CPI, what's PPI, what's core inflation, and then we'll go through the live trading itself. Again, as I previously mentioned at the beginning of this session, it is going to be a little bit unique, so I need to show you some of the key levels that you need to monitor for your trades tonight. Okay. All right, so what is inflation? Inflation is basically the rate at which prices for goods and services rise, and obviously inflation is going to continue to rise every year. Even in periods of deflation, we don't actually see a huge drop in inflation like ever. It's very easy to take a look at how things are compared to what it was 5 years, 10 years ago. Things are a lot more expensive, and as the year goes by, it's also going to be more expensive. Okay, so the most commonly used inflation index are going to be your consumer price index, your core CPI index, and also your PPI and core PPI. Right, so what are those stuff that I just talked about? So let's take a look at CPI first. This is going to be the main data that we are going to dissect tonight. So consumer price index is a critical indicator of pricing pressures in the economy. It provides you with a gauge of inflation, and forex traders monitor the CPI because they can lead to changes in monetary policy conducted by the central bank, which can either strengthen or weaken the currency against the rivals in the market. Now, let me pause here for a little bit. And the reason why this CPI is actually going to be a little bit unique, we know the FOMC is going to be cutting interest rates this month, right? And we know the ECB is going to cut tomorrow. So a lot of the questions or a lot of the puzzles is basically out of the market, right? We know that the global economy Global central banks around the world, except for Japan, obviously, because Japan continues to plan to hike interest rates, but everyone else is looking at cutting back on the interest rate. And the reason for that is inflation has come off quite rapidly as well. And, I think the FOMC themselves has actually shifted their attention away from CPI numbers, away from the inflation number, focusing more on the labor data. And that's why we put a lot more importance this month in the labor data, which was released last Friday. And we all know how the reaction in the market was last Friday. It was a little bit unique, but it's not unpredictable. We actually created a couple of scenarios and actually fall into one of our scenarios, which is scenario number 2. If you're wondering what's going on, feel free to come back to that recording, which is on Friday. All right. Anyway, let's continue. In terms of the CPI, what does the CPI do? The CPI measures your cost of living. It includes broad range of goods and services purchased by consumer. It includes international personal consumption items. So items you import into the country is going to be part of that consumer price index. Scope excludes changes in interest rates or costs, right? Now, CPI, very simple. CPI basically us, retailers, consumers, right? This is how much we're paying for stuff. That's the way you look at things, okay? CPI goes up, things that you pay for your basic livings are basically going to go up with it as well. And typically, inflation does correlate with a higher standard of living as well. So typically with a higher inflation, in a developed country or developing countries, we typically see a higher inflation. Things are more expensive in a developed country, for example. Any country with a higher standard of living is going to have higher prices, and that kind of correlates to the CPI itself. Now, the PPI is basically the producer's price index. This is how much it costs for the producer to produce or provide services to you. That's basically the cost of business, put it simple, right? PPI is how much it costs to produce. CPI is how much it costs to purchase. Simple as that. The PPI itself, it measures real growth in output. It includes items produced for personal consumption. It does not include imports. And it has services with prices including an interest rate component. So somehow a part of the interest rate component is actually factored into the PPI. And this is the reason why we actually don't focus a lot on the PPI. We focus a lot more on the CPI, right? The buying power from the consumer. That's basically the main focus. If people have more buying power, they are going to push inflation up. If people are getting paid more, if salary goes up, wages goes up, that could push inflation up as well. And obviously the PPI does play a huge part as well. If it costs a lot more to produce something, it could drive inflation up. And one of the main reasons why inflation was so high post-COVID, it was basically on the back of that shortages, which is the supply chain issues that they have during the pandemic that kind of push production up. Okay. All right. So that's CPI, that's PPI. So what is the core inflation? The core inflation is basically core CPI. It's basically CPI numbers that exclude those from food and energy services. All right. It's basically CPI minus foods and energy sectors. In terms of the foods that we're referring to that's being excluded, this is fresh food produce, right? Because obviously fresh foods are going to be seasonal, vegetables, fruits, they're going to be seasonal. If there's a long drought, for example, then obviously prices could be inflated. So there's a lot of volatility in there. And obviously energy sectors, oil prices, gas prices are going to be included in there. Again, geopolitical tension could push prices up. It could cause short-term volatility. So core CPI basically looks at prices, excluding all this volatility. It is what we also call the underlying inflation, right? So again, core inflation is determined using the consumer price index, and we'll cover a few of the stuff here that we're going to talk about in terms of what we're viewing in terms of the CPI as well as the core CPI. All right. Hey Daniel, Welcome back. Good to be back after a long break. Hey everyone, I don't know, is there a lag? I don't know, Albert is saying here, is everyone else experiencing a lag? From my side, that's all green. I'm going full speed right now. I don't have any connection issues. But let me know if there's any issues, because you guys have been a little bit too quiet here. But yeah, let me know if there are issues, because we don't want to be in a situation. I think last week we had a little bit of a lag, right? We had a little bit of a trouble connecting to the YouTube stream, and I think that was last Friday. We had a little bit of a problem. So hopefully tonight everything is going to be crystal clear. Okay, but let me know if the team can also let me know if everything is going through okay. Then yeah, I'm just going to continue. Okay, so let's talk about the data that we are expecting tonight. Okay, so these are the numbers that we are expecting. Let's take a look at the inflation rate first, which is the year-on-year inflation rate, and that's going to be there. Right, previous number was at 2.9%. The market is expecting, a pretty huge drop off, right, to 2.6%. So we're looking at 0.3% being off compared to last month. That's going to be a rapid drop, and if we do see that inflation drop down to 2.6%, then yeah, 100% guarantee that the FOMC is going to be cutting interest rate on the 18th of September. And here's the thing, without the inflation number tonight, we know that they are going to be cutting interest rates on the 18th of September. Right now, again, as I previously mentioned on Friday, projected rate cut is 25 basis points. That has been 100% fully priced into the market. Obviously, we have an inflation rate that's below consensus. 2.5% is enough to trigger the market into thinking and start pricing in for a 50 basis points cut on the 18th of September, which is going to be next week, exactly 7 days from now. Okay, so it's not super hard to kind of figure things out. And what if the inflation number comes in above 2.6%? Well, the forecast here is up to 2.7%. I think as plus or minus 0.1 or 0.2, it's not going to cause a lot of issues. I don't think it's going to be a problem if the inflation rate remains below 3%. The upside surprise is if inflation rate tonight comes in higher at 3%. That's going to be higher than last month at 2.9%. If we get a reading of 3%, then expect the US dollar to strengthen. Not because the FOMC is not going to cut interest rate. They are still going to cut interest rate. Even if the inflation number goes up tonight, they are still going to cut interest rate. But do keep in mind, last week, I think from 2 weeks ago, that 25 basis points cut has been fully priced in. So a lot of traders right now out there are actually trying to price in that 50 basis points cut. I think the market right now, in terms of the Fed Watch tools that we have here, is that 30% are skewing towards that 50 basis points cut, and the number remains at 27 to 30%. So if we have a higher inflation number, we could get this 30% being taken out of the market. That could actually boost the US dollar in the short term. So just keep that in mind. That would be the exception that we have for this week. Okay. Core inflation rate year on year is expected to remain stable at 3.2%, no changes on the core inflation. So the underlying inflation remains at 3.2%. And this is going to be what the FOMC is referring to anyway, because they look at the core inflation, it's higher than the CPI number. And, they still decided that, yes, it's time that they're going to be cutting interest rates. So again, as I said, if inflation does go up a little bit, it doesn't change what the FOMC is actually going to do. It does change a couple of things, maybe the 30% that starts to price in for that 50 basis points, that might get taken away if inflation goes up. But if inflation comes down lower than what the consensus is, let's say the core inflation dropped down to 3.1% or 3%, when the headline inflation or the headline CPI, the year-on-year CPI, drops down below 2.6% at 2.5%, then you'll see the market go wild today. They'll start pricing in for that interest rate cut. You're going to see risk assets rally. You're going to see the US dollar being pressured down. Okay, so I think that would be the surprises that we have. One thing that we are not quite sure of, and would actually fall into the more difficult way to kind of react immediately to the news release, is if inflation comes in as per consensus. That's going to be really hard to kind of figure out, because then we need to look at the breakdown, what's losing, what's decreasing in terms of the inflation and stuff like that, which is something that I don't expect you guys to be able to do, but that's something that we need to look, should we have an equal consensus. Okay, all right, so this is the current breakdown that we have here. Again, what could it be slowing things down? Obviously, if we take a look at the whole thing, gasoline prices, that's expected to decline. Rents and car insurance could show sign of slowing. Again, expected for this one to continue to fall off. Current consensus is going to be at 2.6%, previously at 2.9%. This is the chart that we have here. Ever since March, we have seen a steady drop. 3.5, 3.4, 3.3, 3, 2.9. Tonight, we're expecting a drop to 2.6%. This is the core inflation rate, and you can take a look at the core inflation rate. It has been steadily dropping down the past 12 months. I think exactly 1 year ago we were at 4.3%. Right now we are at 3.2%. So within a year, the core inflation has dropped down 1%. That's a lot. Okay. So a couple of breakdowns as well. What are we expecting to see in terms of the core inflation here? Let me see what's the breakdown. Personal care up 3.2 versus 3.4. Not really much of a change in terms of the core CPI, I'll be honest with you. So this one here being steady at 3.2%, I think that's about the expected rate. Okay, this is the change of rate per month, and obviously last month, even though we have a drop in the headline inflation, which is the year-on-year inflation number, the monthly actually start to pick up. It's not that it's actually starting to pick up. If you take a look at this, where the level is per month, it is at about 0.2, 0.3%. So we're not expecting anything major or anything like that. It's just that May and June, we have a significant drop off in terms of the rate there. Okay, so let me switch on to the chart. We have a lot of time tonight, and which is a good progress. I want to talk about a couple of things, and obviously number one, it's going to be the dollar index itself. So this is the dollar index. As you can see with the dollar index here, it is kind of struggling a little bit. This is still in line with our outlook from last week that we have that resistance at 102. That's still going to cap for the progress. And in terms of whether or not the US dollar correction was done and over with, what I mentioned from last week was it's not quite done yet. We could actually see the US dollar still kind of maintaining their position. We see a little bit of a drop off today. I think that's on the back of the dollar yen, because this morning Bank of Japan has already mentioned that our interest rate is still low. I think there's a little bit more room for us to hike interest rates. That kind of pulled down the dollar index here a little bit, but you can see here it's actually kind of stuck between 23.6 and 38.2 in terms of the Fib retracement on the daily time frame. All right, let's focus on intraday key levels. Dollar yen, this one here, it's a huge glare in the eye. Take a look at this box here. That was actually the August low, and if we drag that August low, obviously we saw that bounce happen early September, it kind of pushed back up, and then market just went down below it again today. So let me just zoom in a little bit. All right, see if I can zoom in a little bit closer. All right, so right now we're back testing that level, and this is where it's really more of an eyesore, right? The support one at 141.83, around 141.90 to 142. That's good. Basically going to be our resistance that needs to be tested for this one to continue to the downside. If the market does recover beyond 141.90, 142 tonight, there could be a strong possibility the US dollar could actually rally up. But if it fails here tonight, right, we are at that resistance level. This is previous support now being tested as resistance. This is going to be a confirmation to a lot of traders that, you know what, the Japanese yen could actually strengthen a little bit more. The US dollar could actually fall. So the dollar Japanese yen is at a critical level at this point in time. Unfortunately, we're not able to straddle the market here because we don't have that corridor of volatility. So back to old school analysis on this one here. Right now, it's testing previous support as resistance. This is going to be our main focus for tonight. It is currently stuck exactly at support 1. On the daily pivot, and do keep in mind today the market has actually broken below support 2. If it fails at support 1 today, then it will come back to support 2, and there's going to be a huge probability it could actually run to support 3, and that's actually a huge distance. That's the anticipated potential move that we have here. That's still about 150 pips in terms of push to the downside. However, if it does break above 142 and maintain that position above 142, it will rally back up towards the pivot. That's going to be about 142.70, 142.75, and beyond this, I actually wouldn't take that rally up. I would be waiting up there for a potential failure at about 142.50 to 142.75. Make sure your stop loss is going to be at 143. This is going to be a scenario where we could actually use our limit order if market does break above 142. But we'll take a look at the dollar yen back here once the news is released. Okay, the next one, it's going to be the euro USD, and for the euro USD, this one here is looking a little bit exhausted. Do keep in note here that this is currently stuck at the Ishimoku cloud. The price is actually inside the Ishimoku cloud. It is actually not a wise decision to start having a position right now, but we can straddle the euro USD tonight. There is room for us to actually straddle the euro USD. So we're going to be employing our buy stop and sell stop order on the euro USD. I'll be doing that in the next 3 minutes. This one here, not a huge problem. What I'm seeing here is that there could actually be a higher probability it could actually fail as well. So this is where it gets tricky, right? Because the dollar yen seems like it's at a resistance. It's testing previous support. But the euro USD looks exhausted as well. Maybe it could fail, right? We don't know. It's actually inside the Ishimoku cloud. It could transition above that once price closed above 1.1050. You know, we could see a run towards 1.1075. But it's going to be really highly dependent whether or not the market is actually going to price in that 50 basis points. If the number comes in lower, right, at 2.5%, or the core inflation drops tonight, then yeah, we could potentially see a break to the upside for the euro USD, because then everyone is going to start pricing it for 50 basis points, and that is going to be the only criteria for tonight for the euro USD to actually start rallying up like crazy to the upside. Okay, there are limitations obviously, because if you take a look at how thick that Ishimoku cloud is, immediate push higher is still going to be capped at resistance 3, exactly at 1.1075. And that's also going to be the upper range of the Ishimoku cloud. So we have a rather thick resistance for the euro USD. Pound USD is also inside the Ishimoku cloud. It's actually it has been maintaining a position inside the Ishimoku cloud throughout the whole day. It is bouncing off pivot 1.3080. All right, if it's able to move back up above 1.31, then we could actually see this one rally up a little bit higher. But there are still going to be resistance on the upper side there. We got resistance to at 1.3140 up to 1.3150. That's still going to cap resistance on the pound USD. If it does break below pivot level, then we'll come back to 1.3050. 1.3050 is in line with our daily major support, and we need that level to be broken. Otherwise, we're not going to be able to see further push lower on the pound USD. But you know, if we have a good number that's going to be boosting the US dollar, even if the pound USD fall, we still have 1.30 as our major critical support level. Okay, so that's the stuff that we have here. You know, we can straddle the euro USD. We might be able to do that on the pound USD as well, but it's really tough to look at that scenario. Okay, the next thing, it's obviously gold. A lot of you guys are going to be looking at gold. We are unfortunately not able to straddle gold, and I'll move on to the MT4 and I'll show you what's going on here, especially for gold. This is actually moving in a little bit of a channel that moves to the upside, so we're not able to straddle the gold at this point in time. So we will come back and reassess the situation for gold after our trades tonight. Okay, Aussie USD and New Zealand USD, this is still in range. We have that corridor of volatility, and this is going to be the first one that we are actually going to place our buy stop order first. Okay, so the buy stop for this one here is going to be at 66.85. all right, just a little bit, about 10 pips away from that high there, and also 10 pips down, so about 66.35 for our sell stop. That should do for the Aussie USD. This one here is, I think this is a pretty stable currency at this point in time. This one here is okay. We have that corridor of volatility, and in fact, if you attended yesterday's session, we already talked about the corridor of volatility. The dollar Japanese yen broke out of the corridor of volatility that we have yesterday, and for today we don't have that corridor of volatility because the dollar yen is not really moving in a sideways market condition. The euro USD, we do have a little bit of a range. All right, we want to focus on 1.1050 to be broken, so extend this a little bit. Right, we are going to have our buy stop slightly above 1.1060, and in terms of our sell stop, you do want to have it a little bit lower. And I'm not going to go on to the 50-minute time frame, because if I were to go into the 50-minute time frame, we do have a smaller corridor of volatility that's going to be at 1.1035. So it's very close to the current price, and we could be whipsawed by that, and we don't want that. Okay, so we are going to place our buy stop a little bit lower for the euro USD. So we're focusing on the hourly time frame for the euro USD and the Aussie USD. There is a small corridor of volatility. If you want to, you can get into the market earlier, about 20 pips at 1.1035, but I'm afraid that could be a whipsaw. If we place it too close, it would just whipsaw the whole thing. All right, pound USD, this one here, we don't really have the corridor of volatility. Even on the 50-minute time frame, it's really small, but it's kind of below that 1.31. It's so close to the psychological price level. This one here is actually going to be really tough if you want to kind of cage the whole thing. So if you do want to do that for the pound USD, you can do so, and that would be at I know the buy stop is going to be above 1.31. And for the sell stop, you can have it just slightly below 1.3075. It's very close to the current price, though. It's within a 25 pip range. There could be a huge possibility for a whipsaw that could happen. So feel free to have it, but just consider the risk for the pound USD. Okay. So dollar yen, we're not able to do that. We'll just wait on the dollar yen, Aussie USD, and euro USD. We have our positioning. New Zealand USD, we have a little bit of corridor of volatility as well if you want to, but it's looking a little bit choppy. So make a choice whether it's going to be New Zealand USD or Aussie USD. But for New Zealand USD, you definitely want to have this lower below 61.35, right? You want to have it at 61.35 for your sell stop. In terms of your buy stop, you do want to have it a little bit higher, maybe above 61.55. Okay, so that's the positions that we have there. News is going to get released anytime soon. But yeah, if you have any questions, any requests or anything, let me know. But in the meantime, we're just going to be waiting for that news to be released. Okay, should see quite an immediate reaction, and let's see the breakdown of the news as well. Okay. Whew. So dollar yen will wait, gold will wait, euro USD, you can straddle this. The pound USD, it's a small range. It's up to you whether you want to straddle this. There's a huge possibility we could actually get whipsawed because the range is just so small in the pound USD. But it is beyond. Actually, I'm just going to adjust this slightly. All right, an extra 5 pip, 1.3105. All right, we got our sell triggered. And I think inflation might be coming in a little bit hot. Let me see. No, initial reactions. See what happens here. New Zealand USD is triggered, so I need to cancel New Zealand USD buy. Pound USD buy needs to be canceled. All right. So it's super volatile right now. New Zealand USD, everything is down. No buy stop was triggered. At least we don't have a whipsaw. Okay, CPI is reported. It is lower. The general number is lower. Let me just pull up my data here. What do we have? Inflation rate is at 2.5%. That's lower than what the market is expecting. Core inflation flat at 3.2%. So it is actually going to be, I don't like the current positioning. If we have a little bit of a positive, please get out of the current situation. Okay, the number is that we have a lower inflation number, so we could actually see a little bit of a boost on the pound USD and Euro USD. In fact, I would limit this. If the total goes to about 50-60 pips, we need to clear off, but we'll see how it goes. Let's see everything else. Monthly rate for the core inflation does pick up 0.2% to 0.3%. The data is not actually, it is actually not mixed in terms of the headline inflation. I think we have a significant drop. Every other number that we have here is also a huge drop as well. So I'm not liking this trade. Let's, close out and we'll analyze manually. Feel free to, if you have a profitable position, if you can move it to break even, feel free to do so. But right now, I'm really more concerned about the US dollar potentially weakening, and we'll go back to the main chart. I don't think it's really bad at this point in time. Let me see the breakdown here. What's the current breakdown that we have here? Okay. Export prices are up. Export prices are up. Food inflation remains the same. Import prices are slightly up. Not really much, I'll be honest with you. Okay, so yeah, let's flip the trade. We are actually going to go long on Euro USD and we're going long on Pound USD. Dollar Yen, I'll leave this one be. For gold here, not quite sure. I think we can get a lower price for gold. I think we can get a little bit of a lower price on gold. Right, for the Euro USD, you really don't want to, you don't really want your stop loss to be too far at this point in time, right? We will go with 1.10. Slightly below that, 1.1090. Should be more than enough. Fundamentally, this should get the market into more of a risk appetite move. And let's see for the Pound USD. Pound USD is actually not that hard. We have that low at 1.3050. We can use that 1.3050. You want to have it a little bit lower, about 1.3040. And that's pretty much it. All right. If you got stopped out, it's fine. It's not really a huge risk at this point in time. I think for the pound, it's about 32 pips. Euro USD as well. I don't think it's actually that huge. It's much bigger. It's about 40 pips. But yeah, leave a little bit of a room to go on the Euro USD and Pound USD. Aussie USD again. I wouldn't be short on this one here. New Zealand USD, a little bit of an excessive move here, but again, if the hourly doesn't close below this low here, that's about 61.25. We got nothing. In fact, we will take a look at that as potential bounce. Gold is the one I'm actually really concerned about. Are we going to get a lower price for gold here? Because this one here, in terms of how gold has been moving before the market and whatnot, it's been a little bit more on the aggressive side. Okay, but yeah, I'll leave the Euro USD and I'll leave the Pound USD. I like this trade. The Dollar Yen, I'm not looking at anything on the Dollar Yen at this point in time. Let's switch back to Trading View, and I'll take in any requests that we have here. All right, gold is actually coming back to pivot. I think for gold, we could have a much better price, right? Actually, for gold, if you are planning to have a position, I wouldn't enter now, but I don't mind a limit order. I don't mind a limit order closer to 2505. We could probably get that level there. Again, for stop loss, I don't want to go too far on in terms of how far the stop loss is. 2495. It's really kind of the maximum in terms of how much I would go for this one here. In terms of the gain that we're looking at here, I'm more than happy to take 2525 or 2530. But yeah, that's the current plan that we have here. Risk reward ratio looks good. I don't have an issue here. I think we could get a little bit of a better price on gold here. Okay. All right, I'll take any requests. But yeah, this here is actually still very well supported for gold here. I don't have an issue even on the early time frame. The RSI is dropping out really quickly here. Everything could reset really quickly. So don't be surprised if the initial move seems like, okay, it doesn't quite make sense, but you'll start noticing in terms of what could go on here. All right. Euro USD and pound USD, again, if you got stopped out, I don't think that's going to be an issue. Again, the concern that we have here on the Euro USD is from a technical view, but it's not really supportive of what we have in terms of inflation at 2.5% at this point in time. Okay, so, I prefer a long position close to the 1.10. You don't really want to have that much of a stop loss on this one here. Really, in all honesty, 1.0990, it should be more than enough to give room for the Euro USD. Okay, do keep in mind the cold condition here is right now still below the Ishimoku cloud. The pound USD here again also stable. I don't have quite an issue on this one here. Dollar yen. This is something I want to focus on a little bit because this is obviously a huge driver in the market, right? If you want to take a look at the range of movement yesterday until this morning, it was at 3 yen. That's 300 pips. That's crazy. Anyway, for this one here, we'll wait for a little bit. I don't want to go long on the dollar Japanese yen at this point in time. It doesn't click from a fundamental perspective because right now we have a huge drop on inflation, and the Bank of Japan this morning has already mentioned that they have a lot of room to hike interest rates. So interest rate differentials is going to shrink, and in the short term that is still going to put a lead in terms of the dollar yen strength. Okay, the yen could actually gain a lot more. All right. There's a request for Euro Swiss. Sorry, I just saw that. Request for Euro Swiss. Euro Swiss right now, technically speaking, this one here, it's easy for this one to actually break above it. I wouldn't open a position right now unless you're planning to continue to go short. If we have a strong rejection at resistance 1 intraday wise and the stochastics turn around, then yeah, we could go for a little bit of a short here, unless you want to set up a limit order closer to 93.75, and then your stop loss wouldn't have to be too far away. 93.90 is about the maximum stop loss, or maybe 94 capped out. That's beyond resistance 2 if you want to have a limit order on the Euro Swiss. But at this point in time, I wouldn't actually take a position on the Euro Swiss because do keep in mind, if the US dollar weakens, the Euro USD gain, the Euro Swiss could actually go up with it as well. Right? Euro pound is pretty stable. No, not an issue here. Euro yen is already starting to pick up pace. Euro USD, it's coming back down closer to 1.10. If you haven't had a position, I would consider that. That would minimize your stop loss. It's going to minimize your risk a lot. Okay. Pound USD also right now coming back to 1.3055. Very close to our stop loss, 1.3045. But hey, that's the risk I'm willing to take. It's not bad of a risk considering the fundamentals that we have right now. Okay, so we'll see what happens. A lot of noise. Obviously, this one here doesn't quite register. What's the market thinking? Have they been pricing in for that 50 basis points and right now it's a disappointment, or there might be a little bit of profit taking that goes on here, a little bit of a position adjustment, but from the initial reaction it doesn't quite click, right? Unless everyone's looking at the core inflation rate changes per month that goes up from 0.2 to 0.3, but the headline year-on-year core inflation remains flat as per consensus at 3.2%. What I see here, all the other data in terms of inflation, I see inflation, coming down in the US. Okay, so yeah, just keep in mind. Obviously, there's going to be a lot of noise in the market. You might want to wait for everything to settle down before jumping into the market as well. Stop loss for pound 130.40. It's the max, right? That's how far you want to have for the pound USD. You might want to go a little bit lower if you want to, but considering the current condition, that remember that we're going against what the technical is currently looking at. So I don't really want to have that beyond 130.40. But yeah, in terms of target, 1.31 is going to be your first target. Beyond that, you can also aim for the resistance one. That's 1.3110. Do keep in mind last night it actually fails at 1.3110, right? So that's going to be the limit, but look at the risk reward ratio. You're not really risking too much. Even if you go in at a higher price level, if you risk about 30 pips, it's still going to be 1-to-1.5. Okay, right now it's really small. You have a lot of room to move your stop loss, but what we did just now, the one that I'm comfortable with is at 1.3040, 1.3035. If it touches that level, then I'll need to reassess everything, and I would just say, you know what, I'll take the risk that we have here for countering whatever the momentum that we have from the initial release in the market. Okay, all right, so last point USD. I think Euro USD is also very close, very close to 1.10. So we'll see what happens here. Intraday wise, on the early time frame, it seems like there's actually a lot of momentum to go to the downside. So expecting a little bit more noise than what I expected. 2505, it's triggered. Stop loss, not too far, yeah. 2505, 2495, that's the limit, right? We don't want to risk any more than that, because hitting 2495 will actually take this below the Ishimoku cloud, give it a little bit more room to go, but yeah, that's how far you want to go with it. All right, limit has been breached, I believe, yeah, good. Limit's taken out. Euro USD and Pound USD testing and approaching stop loss. We'll see what happens here. But yeah, gold, for now, I'm quite okay with that. If you had the limit order being triggered, feel free to keep that position. 2505. If you are able to start moving a stop loss to break even just in case, feel free to do that as well. But in terms of the initial stop loss, it's going to be at 2495. Take profit 2525, 2530. That's it. Markets still prefer core CPI to go down than the headline CPI. Yeah, we could say that, but apart from that monthly, I don't think we have any problem. We can also check on the yields actually. Let's take a look at a 10-year yield, because this could be what's moving up. All right, so do keep in mind, this is the outlook on the 10-year yield. This one here could push higher, but it could actually fail at 3.7 and 3.725. Should that be the case tonight, we might actually see the market turn around. So don't be too surprised if you see a market reaction that goes up, touch resistance 1 on a 10-year yield, reverse back down, because we do have resistance at 3.7 to 3.725. If we didn't get it right now, then we'll wait. I have no rush. I'll wait, and I'll see if the 10-year yield fails at that level. If it does fail at that level, then it would actually be time to know that the US dollar could actually start to weaken as well. So we'll see what the reaction is, whether or not the 10-year yield is actually able to penetrate above 3.725. If that's the case, then we'll take it above the Ishimoku cloud. It would reverse everything. I think the Euro USD and the Pound USD should be stopped up by now. Nope. Still hanging on. Very close to it, but yeah. Oops. What did I do? There we go. Very close to support 1 right now for the Euro USD. In terms of volume, obviously we have a huge spike that we have here. Let's see if the volume starts to diminish on the 5-minute time frame here. Yeah, we'll see. Very close to that support that we have. I like the risk reward ratio. Yeah, I like that too. But obviously looking at the current pricing on this one here, I don't think this initial push is going to be the direction of the market for the week. Just keep that in mind, because as everything lines up, everyone is going to start pricing in for a potential 50 cut in September. If they didn't get it in September, then they expect October to happen, right? But I think one huge cut is now priced into the market. We just don't know whether it's actually going to be September or is it going to be October. So the estimated cut for this year has gone up from 75 basis points to basically 100 at this point in time. Okay. All right, we'll see what happens. Yeah, still there. Gold is still being pressured lower at this point in time. But yeah, I really don't want to risk any more than 2495 for gold. It's not worth it. If you kind of stretch it out to 2485, then you might as well just get out and just wait at a lower price. But again, with the higher cut expected, I don't think we should be. We'll see. We'll see what happens. Any requests for anything that you guys have while I'm trying to dig some data in terms of the inflation breakdown? Weekly earnings up 0.5 for energy prices is up 0.1%, 0.2. Energy prices down. Used cars. Okay, this is actually very interesting. Let me get the Fed Watch tool and I'll show it to you guys here as well. So if you want to know, let's see, where's the Fed Watch tool? Here we go. All right, please refer to this website if you want to look at what the market is pricing in for the FOMC. Right now, you can see what's going on here. The probability for a 50 basis points cut, it's actually lower. Surprisingly, it is actually lower at 15%, which is weird because previously we had 30% on the expected 50 basis points cut. So one day before that, it was actually 34%. It's now down to 15%. For a 25 basis points cut, it's gone up from 66 to 85. So I think they're expecting a much bigger rate cut not to happen this month, but in October. And that's probably why you're looking at that, initial reaction and adjustments in the market. But fundamentally, I don't think there's anything wrong with what we're looking at. I think the market has come down to very close to the support level, and I stick to my view that you could potentially see the US dollar weaken. All right, so I expect a little bit of a gain on the Euro USD and pound USD. You could wait for it on the early time frame from a technical perspective in terms of whether or not you want to enter the market, but it doesn't change the fact that we have inflation below consensus at 2.5%. If you got 2.6%, I might be worried. I wouldn't make that decision, but it is at 2.5%. It is quite significant. Okay. Any other requests for tonight? Anything else you guys want me to have a look at? I think there was a request to look at what? Apple? Yeah, I'll look at Apple. It's pre-market though. Are you expecting a spike up in Apple? In all honesty, I highly doubt it. Products being announced yesterday, not really that great. So here's Apple. This is my view on Apple. It hasn't changed, right? If you're thinking of going long on Apple, as long as it's above 200, I don't have an issue as long as it's above 200. From a technical perspective, we could potentially be looking at a bounce here. We might be finding support max at about 215, but anywhere between 220 and 215, it's probably a good price. Pre-market reaction to this one here, it's going to be about flat for Apple. Still above the cloud, very thin though, just keep in mind. But once everything is in line, stochastics turn around, we might see a little bit of a pickup in Apple. Okay. The problem with Apple is there's a delay in their Apple Intelligence release. I think that could actually affect how people actually want to purchase their iPhones. Might be a little bit of a delay, but if they deliver, then I don't have an issue at all with Apple. Okay. Any questions so far? Anything else to discuss for tonight? We still have time if you guys want to ask for anything, but I don't have my view on the dollar at this point in time. We might be disadvantaged by the current pricing, but we'll see what happens here, right? Ignore the stochastics if you will. We do have limits in terms of where the support is going to be. 127.2% is basically where price is currently at. Max is going to go at 1.0990. That's kind of where our stop loss is going to be, but it is going to be below the support to about 10 pips below the support too. Okay. All right, that's for the Euro USD. In particular, as a little bit of a disclaimer, I actually have one currency in focus, and that it's actually going to be the dollar Japanese yen. I'm actually waiting for this one to test 142.50, 142.75 at this point in time, right? If it fails at those levels, it will fail at pivot, it will fail around the Ishimoku cloud, it will initiate a potential sell-off. But if it does break beyond that level, it maintains the position above 143, then I'll let it go. No point chasing this one here, because from a fundamental perspective, it just doesn't click with me right now. I don't think we are going to see carry trades continue. In terms of carry trade unwinding, we could see a little bit more unwinding happening. In terms of what the Bank of Japan is actually going to do, they have, again, they just mentioned it this morning, that they have room to hike interest rates. Their rates are very accommodative. No major problems for them. Okay, so this one moves really quickly, and again, I'll be waiting for any failures on the dollar Japanese yen. I'll have a lot more confidence for dollar Japanese yen if it fails, considering that what we're looking at on the daily time frame, this is still way below the Ishimoku cloud. We break a lot of support level, but if it closes today like this, then everyone might look at that and say, hey, it bounces off last year's low around December 2023. Is it a significant price level where it bounces off from 141? Yes, it is. Dollar next starting to go to 102. That's okay. 102, 102.50. The previous change of character that happened was 102. What is this? 102.36. So the next barrier would be around here, but this is going to be on the daily time frame. If you switch onto the hourly time frame, you can see in the next few hours, maybe up until morning, the Ishimoku cloud is actually going to be thin. So we'll see what happens here. Any failures at 102, or is it going to spike at 102.50? We don't know. But if it does spike to 102.50, we'll stay away. All right, we don't want to just go crazy picking up the Euro USD and pound USD at a low. Obviously, if it pushes up higher, that would be highly dependent right now on the 10-year yield. So if you want to have that focus, then go for the 10-year yield, because that's going to be the deciding factor on the US dollar tonight. If the 10-year yield starts failing, then that's your cue to see that, yeah, maybe it's time to start shorting the US dollar. Okay, but this is going to be your main indicator for today, which is the 10-year yield. There's actually a lot of resistance for the 10-year yield. I can zoom out if you want to. Take a look at this one here. Even by the short-term standard, if we go just by this week's resistance, we actually are at the resistance trend line at this point in time. Okay, so I still expect this to fail at 3.7, 3.725 max, right? But once it starts failing, you know, how far can it go? Maybe at 3.7. It could fail there. So we'll see what happens here. Okay. So we got everything planned out. Positions wise, I'm not changing the positions that we have. I don't think there's a reason to. In fact, if you want to buy in, if you didn't manage to buy in, I would say go for it. Your risk, it's actually pretty small, right? What's your risk here? Your risk is about 13, 15 pips of risk on the pound USD. Euro USD, since we have it at 1.0990, that's going to give you about 20 pips exactly. So not not a bad risk, in all honesty. In all honesty, I don't think it's a bad risk. Okay, but if you want to time everything, what are we looking at? Are we focusing on the momentum here, or are we just focusing more on the logic here that we saw an inflation drop below consensus? Everyone is going to start picking this up. Okay, once the initial noise in the market settles down, you have to start thinking about the fundamentals, the facts that we have here, the data that we have. I think if we take a look at this, everyone is watching the FedWatch tool that we have here. I know it's dropped down from 34%, right? 1 month ago it's at 51%. Last week it's at 44. Yesterday was at 34%. Today it's at 50% in terms of the 50 basis points cut. That is for tomorrow. Okay? So you have to think about when this consensus is going to be. That's actually going to be for not tomorrow, for this month's rate cut. Okay? Dollar Swiss potential double bottom on daily. Let's take a look. I don't even need to take a look at that, because if you take a look at the dollar yen, everyone would say, hey, there's also a potential double bottom that kind of matches December low. But yeah, we are looking at the same thing. That's the December low. So yeah, not really too concerned about whether it's actually going to be a double bottom or not. We don't actually have a strong indication if that's going to be the case, and we don't have that confirmation until when? Until price breaks at least above 86 on the dollar Swiss, or even more confirmation 87.50. We're still quite a long way from that confirmation. So I wouldn't call this a confirmed double bottom. We do note that as a strong support. That's the same bottom that we have here on the dollar Japanese yen, exactly the same, right? At 141, dollar Swiss the same thing. If we take a look at dollar Canadian, that low is going to be at 1.3450. Obviously, we have gone past that level there for dollar Canadian. Dollar Canadian is still below the Ichimoku cloud, so just keep that in mind. Okay. Right, but for today, definitely watch the 10-year yield. 10-year yield fails, then you got your cue to jump into the market. Just keep that in mind. Okay. So if there are no questions left, then this is going to be the code that you can use. It's non-farm 2024. Make sure you use the code before December 31st of this year. You have about 3.5 months to use the code. Again, it's non-farm 2024 to double your deposit bonus. All right. Any final questions in the last 2 minutes that we have here? If not, if everything is good, I have a very strong view in terms of the numbers that we have. It's actually not that hard to decipher if you're patient enough. But, look at the current market movement. Happy to take the risk. It's small. It's a small risk to take. Do you think that we might go long today, tomorrow sell off? I would probably go the other way around. We might actually sell off today and probably go long tomorrow. So again, if you want to wait for a little bit, wait until the whole market kind of calms down a little bit. I just need to look at the data in terms of the breakdown for that inflation number. What is actually driving inflation down? I think it's energy prices that's driving the headline inflation down. All right. On ECB speech tomorrow, ECB tomorrow. I think I mentioned this in the outlook, right? For the ECB tomorrow, I think we are getting a cut, right? But I think we are going to look at the overnight rate differentials and the actual interest rate. Right now, the gap is at about 50 basis points. There were plans to decrease this to 15 basis points. So we'll see what happens. I think they have other things planned out as well for the Eurozone in terms of them starting to cut interest rates. But they might still want to make monetary policy a little bit easier, right? Even easier, right? So they might actually do that adjustment. So we'll see what happens for tomorrow. ECB speech tomorrow on the euro. Yes, it could affect the euro, but whether or not it could actually affect the pound, probably not at this level. The euro kind of depends on breaking out of the current range, which is at 1.10 and 1.11. That would be the deciding factor. As simple as that. If it does break below 1.10, then we'll see that movement back towards 1.0950, 1.09. But if it comes back up above 1.1, then it's quite clear in terms of where the US dollar direction is going to be, and whether or not the ECB, I know they're going to be cutting interest rates tomorrow. As long as they don't go crazy and cut 50 basis points, I don't think there's actually much that can be further priced in. You can look at the euro pricing in the past 2 weeks. It has dropped significantly versus all the other currencies. So not really going to be a surprise unless they do a 50 basis points cut. Okay. So with that, let's wrap it up for tonight. Good luck for your trades, and I'll see you guys next month for the